What's happening, y'all? Swing trade Sunday. You know how I do, man. Every week we're gonna talk about the markets. We're gonna show you some of my plays from last week, the play that I called out, give you a little swing trade education, all of that. So, without further ado, I'm gonna go into the play that I called last week. Um, let's see how that turned out. Let's see. Was it this? All right, so this was the play I called out last week. Looked like I was talking in an upward trend. So whenever the 200 moving average is in an upward trend, that means the stock or stock market or whatever is in an uptrend, right? So that's one reason why I like it. Also on a stochastic oscillator, which is this, you know what I'm saying, the blue and orange line underneath the chart, the first section of indicators. When that blue line crosses above the orange line, that is a bullish signal. Sometimes it's temporary. It might be for a day, it might be for half a day or whatever, but it has recently just crossed above that orange line.
Say what?
So we go to the RSI. When usually with
All right.
day
If
trading,
y'all
right?
wanted
So
to see
with
that,
when you trade in a stock,
y'all could go back and watch it,
within
right?
inside the
So
Bollinger
keep a mental as far as where that was on the chart. Let's go back to Google. Now I didn't do this swing because I like to swing perfect setups. I like for the trade to be excellent. Like without a doubt, I'm gonna get some money. And I wasn't 100% for sure on that. So see what Google did. Let's see if I would have made money on Google. All right, so according to, let me make this a little bigger so y'all can see. But forgive me for all these lines. Dang. But according to where I called it at in that last video, Google went up. That would have been a nice trade. That would have been a nice swing trade. So far on my swing trade setup, and what I'm looking for on my swing trade setup is where that last candle that you see in my last video, I'm looking for the next candle or two candles or three, but at least just one candle. I'm looking for the next candle to be higher than that last candle, right? So the week has 5 days. So if this, what's that on the daily chart? So 1, 2, 3, 4, 5. So, I mean, actually, no. Google really traded sideways. I actually may not have made money on that one now that I look at it. 1, 2, 3, 4, 5. Nah, probably would have lost money. Not too much. It looked like Google range traded. Didn't actually do that one. I'm pretty sure I told y'all I wasn't that confident in it. So let's look at the VIX volatility index. Well, let's look at the fear and greed index. All right, so with the fear and greed index, when the market is fearful, you expect it to go up. When the market is greedy, you expect it to go down. On the fear and greed index, I'm not getting really no inclination on where the stock market is planning on going. Looks like it's pretty neutral. So now we're gonna pull out the VIX. We're gonna see what the VIX looking like. All right, so the VIX is the volatility index. When the VIX is up, that's when the stock market is. Hold on, my bad. All right, so let me pull up the VIX for y'all real quick. All right. So when the VIX is up, you expect the stock market to be coming down. So that real big VIX spike, the stock market crashed heavily that day. One key note: if you ever see a big VIX spike after that, Let me go back. If you ever see a real big VIX spike, after that, it's coming back down, which means the stock market is going to go back up. So it's good to check the VIX on the regular. You know what I'm saying? At least once a week. You could check it every day. But if you look whenever the VIX just goes up like crazy, it comes back down, meaning that the stock market went down like crazy because the VIX is inverse. So when you see that VIX go up like that, I mean the stock market went up or went down and it's coming back down, meaning the stock market is going to go back up. So that's one of the key things to look for the VIX. You want the VIX, you want to see a big VIX spike. If you see a big VIX spike, that means the stock market went down a lot, and historically it always has came back up. So the VIX is kind of neutral at this point. It's not really up, it's not really down. I'm not getting too much information on the VIX. So let me pull out the chart. We're gonna first look at VTI, the total stock market index, and then I'm gonna get into the prospects. All right, so the total stock market, it looks like we're at the top. We're at the top of the Bollinger Band. So what I mean by the Bollinger Band, if you new to trading or swing trading or never heard of the Bollinger Band is this red line, like right, if you look far to the right where you see those two large, there was a red candle, then there was a green candle. That green candle was Friday. Each candle is a day on this thing, right? Above those two candles, you see you got orange line, which is an indicator I put on their pivot point, and you got a red swervy line, which is the Bollinger Band. And the Bollinger Band shows where the stock is going to move in between, right? So sometimes it bounces out, sometimes it goes above it, below it, but it mainly trades within the Bollinger Band. So the total stock market index is at the top, near the top of the Bollinger Band, which means we're getting close for a pullback. On top of that, September is a big month where the stock market usually goes down in September. We're about a week away from September, so I wouldn't necessarily say that we're starting to go down tomorrow. We got a little bit of room to go up. So if you're day trading or swing trading, I would have an open bias. You know what I'm saying? As far as like which way you think the stock market is going to go, because September ain't here yet, and we got a little bit more room in the Bollinger Band. It could spike through the top like it did down here when that VIX. You see that this is where that big VIX spike happened at. You see that candle pop way below the Bollinger Band, and that was that day that that VIX popped real hard like that. So that was an easy trade. Like I made good money on that day, just playing, playing the stock up. But that was because I was paying to the VIX, and I traded based on that. But it looks like the stock market is getting ready for a pullback. The last like week or two, it's been going up pretty hard. And we getting close to a pullback. So without further ado, I'm gonna give you what might look like a play. This another week that I'm not too confident in any swing trade plays. To be honest, but um well, we're gonna look at some of these together. We're gonna look at some of these together. Um so I got some good plays um for a dip buy, maybe like a day trade, right? Um Not only I got one stock as far as like a potential swing trade. This is another trade that I'm not gonna really do like that. But just for case study purposes, something for us to look at. Um, so let me pull it up for y'all. I'm looking at Disney. Let me show you why I like Disney. I like it a little bit. I'm not in love with it. I'm not in love with it. Reasons why I'm not in love with it. I'm not in love with it because we're overbought on the RSI. The RSI is this blue area down here at the bottom. RSI is this blue area down at the bottom, this little blue strip in between these two random lines below my chart, right? These three random little squiggles down here that's not part of this chart up here at the top are indicators. The RSI is the one in the middle. So the RSI, usually when the orange line crosses or when the blue line crosses above the orange line, we are in an uptrend. So it crossed above it, but it is overbought. So I don't know. I got a feeling. Hold on. I was supposed to be looking at the play. This is VTI. My bad, y'all. Let me go back to Disney. So we got the hold on. So on the RSI, we got the blue line crossed above the orange line, and it's still above it. So there's one thing that I like about Disney. As for a possible swing. The next thing that I like is that on this smooth MACD, I promise y'all I'm gonna get the name of this indicator correctly, but the smooth MACD indicator, this line that turns from green to red, is still green. So that gave me a little inclination, you know what I'm saying, as far as Disney might still be going up. On top of that, Disney is forming what kind of looks like a bull flag a little bit. And it's on top of the 20. What's the blue? That's the 20. Yeah, Disney is on top of the 20 EMA. And the EMA is an exponential moving average. Stocks use the moving average as support and resistance. So if you look at the past week, literally 1, 2, 3, 4, 5, the past 5 days, Disney has hovered above this, above the 20, above the what's that? Disney has hovered above the 20 EMA and stayed there. So on top of that, we got the 20 EMA and the 9 EMA directly below it. And we have this first S1 support level of a pivot point beneath it. So it looks kind of like a bull flag. If you don't know what a bull flag looks like, let me go ahead and pull that up for y'all real quick. Um, Hold on, let's do a little bull flag real fast. Um, Hold on, let me. Bull flag. All right, so this is a bull flag. If you look, hold on, let me make sure y'all can see this. Yeah, so this is a bull flag, and if you look in a bull flag, it has one set of structure. It could look so many different ways. You know what I'm saying? It could point downwards, it could point straight sideways, it could point up. But a bull flag is basically when, hold on, let me make sure y'all can see this. Let me go back to the chart. So that's a bull flag. When you enter a bull flag in a trade, let me go back to Disney. When you enter a bull flag in a trade, you want to wait until it breaks this line right here, right? It's not a confirmed bull flag until it breaks the top. So say the next day, which would start over here, right next to this last green line over to the right. Say the next day it ends right here. Then you got a confirmed bull flag or what appears to be a bull flag. And then the next couple days it should probably be going up. Now it could go up to 94.2, 94.20, $94.20. But it also may not even go that high just based on the stochastic and RSI indicators. We are very close to overbought, right? So that's my possible play for Disney. I don't like it. I don't do it unless it's perfection. I looked through the whole market and I didn't see perfection. But now I'm gonna go into some good day trade plays because I'm not gonna be swinging next week. So I'm gonna show y'all some day trade. I'm gonna show y'all a day trade play for a short. You know what I'm saying? Something you could do for a put option. Let me see. Where they at? Where they at? Where they at? Where they at? All right, so when y'all see this, this is how I like to trade. I like to trade on certainty, right? So, workday. Workday is extremely overbought, right? It don't get more overbought than this. So, workday is completely out of the Bollinger Band range, right? Let me make sure y'all can see this. So, the Bollinger Band is this red line down here that look like it's chasing the stock. Now the stock did use the what's that? The 200. The stock did use the 200 moving average as support on that day. Looked like it came down and popped off of the 200 and continued to go back up. But we are way outside of the Bollinger Band. We're overbought on the RSI and way overbought on the stochastic. So I like workday because it's just way overbought. It might have beat on earnings or something like that, and now the stock is just way out of range, so it has to come back. So this is how you do what kind of trading this is. This is called mean reversion, right? Mean reversion trading is that the stock has to come back to a mean, right? So you use the Bollinger. The Bollinger Band really helps you with mean reversion trading because it's no longer in the Bollinger Band. And as I showed y'all on the total stock market or the VIX, when there's a strong pop outside of the range, the stock kind of gotta in most cases stocks don't always close gaps, but it kind of gotta it kind of gotta make up for that unreasonable price spike. You know what I'm saying? A lot of the time these price spikes happen off of news or something like that crazy, and it makes the stock overvalued. So based on this chart, it's saying that workday is overvalued and it needs to go up. Now, usually if I see like this is like a hammer candle. Usually if I see a hammer candle bouncing off the 200 MA, I'm like this thing gonna go up. But because it's way that far out of the Bollinger Band and extremely oversold on both the RSI and stochastic, I think workday is coming down. Really, I'm planning for the whole stock market to start coming down in September. I might be day trading throughout September, building up a little more capital for October to probably do some swings from October to January type stuff. So um when I actually do my next swing trade, I'm gonna let y'all know which one I'm gonna do. But until then, I'm gonna keep giving y'all plays that I could possibly find. This is another week. This is week 2. I hate doing this and getting on here and not really giving y'all nothing too crazy. But this is week 2 of something that I'm not really in love with. Couldn't really find a good swing that I really like. But at least I gave y'all work day, you know what I'm saying, for you to do a nice put option. We could get back on here next Sunday to look at work day. But you know what I'm saying? Risk management, man. Y'all don't use all of your capital in a trade, and you know what I'm saying? But make sure you trade it and get that money up.